In this video, we'll be going over IRS Form 8839, Qualified Adoption Expenses. So as you might know, the federal government allows taxpayers certain tax benefits when it comes to costs of adopting a child. So you can either take a dollar for dollar tax credit for the legitimate expenses that you incurred in adopting a child, or if your employer provides benefits or pays for certain costs related to adopting a child, then you can choose to exclude those from your income. Keep in mind that you can't take an adoption credit for expenses that were either reimbursed by your employer or provided under a qualified employer plan. So that would be a double tax benefit, and you can only do one or the other. So we'll go through that in this form walkthrough, and then we'll talk about some of the considerations that you may want to think about when making that decision. So there are three parts to this tax form. Part one is listing the information about your eligible child or children. Regardless of which benefit you choose, everyone has to complete part one. Part two will calculate the adoption credit related to each child listed in part one. And then in part three, we'll talk about employer provided adoption benefits and how you can calculate how much of those benefits are excluded from income and how much of those are considered taxable. So let's get to the top. We'll talk about part one. So at the very top, above part one, we'll enter your taxpayer name and social security number. In part one, we're going to list the information for each eligible child. So there are special rules. If your child was born before 2006 and disabled, you would check the box in column C. There are special rules that go with column D, which is a child in special needs. And in column E, a foreign child. We'll talk about those in a moment. But in this case, John Doe adopted his daughter Elizabeth. She was born in 2010, and the adoption became final in 2023. So we checked this box right here. And then, of course, there's her identifying number. So even though John can only take one or the other, we're going to walk through this form through both parts, part two. We'll talk about there is some income limitation. There's a phase out at a certain income threshold, so we'll talk about that in a moment. So let's go ahead and talk about part two, the adoption credit. So the maximum adoption credit per child is $15,950. That's for the 2023 tax year. The 2024 tax year, I believe the amount is $16,810. So we enter the maximum adoption credit here. John did not file IRS Form 8839 for a prior year for the same child, so we'll enter 0. But if he did enter yes, then you would have to back out those expenses. So we subtract line 3 from line 2, which means we bring down the $15,950. In this case, John incurred $15,000 of qualified adoption expenses. These can be travel costs, meal costs for going to the child, legal fees, court costs, attorney fees. So there's a wide variety of expenses that would be considered qualified expenses. Expenses that are not considered qualified would be expenses incurred in a surrogate pregnancy. If you were adopting your spouse's child, you cannot claim that as a tax benefit. Any expenses that were already reimbursed either at a government level, federal or state level, or by your employer. So, if for example, John's employer paid $10,000 of these expenses, then he would have to reduce that by $10,000, and he would only be able to claim a credit for the $5,000. Now, just a real break here. You may be in a situation where you've spent $30,000 and you decided, you can claim an exclusion for part of it that your employer covered, and then you can take tax credit for the rest. A lot of people may be in a position where they spent $15,000 and they're trying to figure out whether or not it would be better as a credit or as an expense. That would reduce their income. That would be excluded from income. So an exclusion from income is basically the same thing as a deduction. It reduces your income, but it doesn't reduce your tax liability by the same dollar amount. So it only reduces your tax bill by whatever your marginal tax rate is. So let's just say that, John's $15,000 in expenses, and he is in the 24% tax bracket. So if he chose to take a tax credit for this, he can reduce his tax bill by $15,000. If he chose to exclude these expenses from income, then he would reduce his income by $15,000, but his overall, if he's in the, let's say he's in the 24% tax bracket, then he would only save whatever 24% of $15,000 is, which is somewhere around $3,800. So that's all he would be saving. So keep that in mind if you're trying to figure out whether or not it's better to take the tax credit or the tax exclusion. So, the $15,000 tax credit reduces your tax bill by $15,000. The $15,000 exclusion for someone in the 24% tax bracket would reduce their tax bill by $3,600. So now that we've determined that we're going to take the credit for this, we enter the smaller of either the $15,000 or the max exclusion, so that's $15,000. For the purpose of this, John's modified gross income is $150,000. So the modified adjusted gross income, there is a calculation in the form instructions. So right here, we have a table here under line 7. So basically, if you excluded any amounts of income from Puerto Rico, if you claim a foreign tax exclusion on IRS Form 2555, or if you're a resident of American Samoa that excluded certain income from Samoa, then you have to add those exclusions back. So most people don't have to worry about that. But again, if you're excluding income from Puerto Rico, American Samoa, or if you're claiming the foreign earned income exclusion, either the income exclusion or the housing exclusion, then you have to add those back in. So for the purpose of this, John's income is well below the limit. This is for 2023, it's $239,230. So that is the start of what's known as a phase out. Phase out means that your tax benefit gradually goes down as your income gets higher and higher here, and above the let's call it $279,230, then there is zero tax benefit. So someone like Elon Musk would not get any adoption tax credit for adopting a child, no matter what. So in line 8, we'll skip this. We'll skip line 9, and then we'll enter 0 in line 10. We'll bring down the $15,000 and put that there. So let's just, for a moment, go back and pretend that his line 7 amount is more than $239,230. In fact, it happens to be, so we would subtract that from line 7. Let's just say that this happens to be 259,230. And so by subtracting the 239,230, we get an even $20,000. We would then divide this by $40,000, which results in a decimal of 0.500. We would multiply the 96 amount here. So we would have to back out that amount, and then this is the amount of the tax credit that is still available for us to calculate through. So that's the calculation that you would have to do if you were subject to a phase out. We're not in that situation, but I did want to show you what that looked like. So now we're going to add the amounts on line 11 for all 3 children here. We get $15,000. The tax credit carry forward from prior years, there is an adoption credit carry forward worksheet. So if you did this calculation in prior tax years, then you would go back to the carry forward worksheet that looks like this for your prior year tax return. So, for most people, that would be the 2022. You would apply any amounts for this in here. So there is no credit carry forward. John was able to do all this in 1 year. So we add those lines together, 15,000 plus 0. And then there's another credit limit worksheet in the instructions. Let's say, and this basically helps us determine whether or not there are any other refundable tax credits that take precedence over the adoption tax credit. So the credit limit worksheet in any form basically says for a tax credit, there are certain other tax credits that take precedent, and if those tax credits bump this one down, then you may not be able to claim the entire credit in the current year, and then based on the type of credit, you may have options on what to do. So some credits, if you're not allowed to take it in the current year, then you can't take it at all. In the case of the adoption credit, if you can't take the credit in the current year, then you can carry forward the credit, and you would do that by calculating the amount that you take in this year, and then the rest of it goes to a carry forward situation. So the credit limit worksheet, let's imagine that we did that and we have $10,000 available. We're going to enter the smaller of line 14 or 15 here, and that means we would put $10,000 on Schedule 3, line 6C. So Schedule 3 would be the tax credits portion that you can use to reduce income. And then if line 15 is smaller than line 14, if line 15 is smaller than line 14, then you have a tax credit carry forward, and then the instructions would kind of walk you through that. We are doing videos on each of these worksheets, and as I publish those videos, we'll post links in the show notes. And if there are any forms mentioned in this video, we'll put links to articles and videos on those forms in the show notes as well. So if there's anything that you have a question on, please post a comment, and we'll address it. So that takes care of the calculation for the adoption credit. Now let's imagine that instead of the adoption credit, all of these costs were funded by John's employer, and he does not want to take the credit. Instead, he wants to exclude employer-provided adoption benefits from his income. So in this case, he would enter the maximum exclusion per child, 15,950. If he received employer provided benefits for a prior year for the same child, then he would have to go to the instructions and see what he can put in there. So generally speaking, if you received employer provided benefits in a prior year, then that limits the amount of benefits that you can exclude from income in the current year. However, if you adopted a foreign child, then you can bring certain adoption benefits forward into the current year. And there is a worksheet that we produced a video on that walks you through that calculation. So I'll be sure to put that link in the show notes. So in this case, that is not the situation. We're going to drop down the 15,950 down here. Let's imagine that John's W-2 shows $15,000 of adoption benefits in box 12, marked with a code T for adoption benefits. So for all children, we're going to add those amounts. And for Elizabeth, that happens to be just this amount right here. And then we're going to take the smaller of the 15,000 or the 15,950, which happens to be $15,000. So we walk through the same modified adjusted gross income calculations. John's well below that threshold, so we're going to skip lines 24, 25. We'll put a 0 in line 26, and then we're going to bring this $15,000 down here. So we're going to add up all the benefits, $15,000. Since line 28 is not more than line 21, we're going to subtract that. That becomes a 0. That's the amount of taxable benefits. So, if, for example, this amount was if line 28 happened to be, or if these happen to be different, let's just say that he happened to get $20,000 of excluded benefits, then we would be subtracting the line 28. We would get $5,000, right? So you enter the difference here and on line 1F of your Form 1040. So, and that can also be a negative amount. So, that would be negative income. So again, you can claim the adoption credit in part 2 if you paid expenses in a prior year that were not fully reimbursed, and the adoption was not final by the end of the year. If you paid them during the year that were not fully reimbursed by your employer, or if you adopted a child with special needs and the adoption became final in the current year. So there is, for special situations, a little bit more complexity here. We do cover most of these details in our article. So you can find that on teachmepersonalfinance.com. Type in IRS Form 8839 and you'll see the article appear. We'll also put a link to the article in the show notes where we break down each of these parts into very specific detail. So as I mentioned, we'll put links to the show notes or to articles and videos we've created about each of these forms that have been mentioned here in the show notes. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic that you'd like to see covered in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.